And get this recording going. We are going to be recording today's session, and everyone who has registered for the event will be getting a copy of the video recording later today. We would like to welcome our friends from Mynt Systems today who are joining us, Derek and Robert. They're going to go over how to basically take your existing building and retrofit it to be a net zero building, which we all know is increasingly important with climate change and even just, frankly, for the savings. So I'll let these guys take it away.
Thanks so much, Jennifer. Great to be here, everyone. Really excited to share what it is that we've been working on for about 7 years now. We're a company that has a deep background in kind of combined intellectual capital in and around sustainability and all that goes into that. But coming together as an organization 7 years ago to really create a change in the market, a change in or a shift in the paradigm, I should say, around how energy efficiency and renewable energy is being brought to market and for who. And so Rob Hymes, our Chief Development Officer, and I are going to walk through a slide deck that's going to be fairly informative and somewhat maybe a little bit ambiguous, and we can kind of tighten things up as we go through it and dive into a little bit more detail. But this is going to give you a broad overview of who we are, what we're doing, why it matters, and why should you care. So with that, I'm going to hand it over to Rob to kind of start us off here and talk a little bit about this first statement.
Yeah, can everybody see the screen? Everybody sees that buildings that perform better?
Yes.
So. I know we're kind of extra muted, so just make sure. But yeah, so buildings that perform better for people, planet, and profit. To us, that's the core of our business model and our approach and our strategy. It all kind of that's the hub statement, is that we're looking to increase the performance of our clients' buildings so that they are basically performing better for the people that work in them, the people that own them, the planet itself through sustainability initiatives, decarbonization, and then for profit, which is the thing that drives everyone's business decisions in the first place. It's got to make sense for the bottom line. So this is, we like to call this the triple bottom line. It's the core ethos of, what makes a B corporation a B corporation. The idea that, we can be sustainable and do things, with clean tech, clean technology, renewables, and also maintain profitability at the same time. And that's the core to what we are doing at Mynt. And what we really set out to do was prove that model, as a mission. And so here's some, a little bit more.
And Rob, before you dive into the slide, I just want to kind of just add a note there, just from a perspective of, one of the reasons that we started the company, as Rob mentioned, was that triple bottom line, that holistic approach to commercial industrial real estate and how to change things for sustainability in that space. But really what it was about for us at that time when we launched, we saw a whole lot of screaming from the rooftops, as I like to call it, where everybody was talking about what we should do and what the right thing to do was for the ecology, for quality of life for the inhabitants in the buildings, and on and on and on. But there wasn't a really good game plan for how to get that done. Specifically in that mid-market commercial industrial space, there was really no game plan. And so what we realized is that we can talk about this till we're blue in the face, but unless it's making people money, they're really not going to take a lot of action. So just to kind of put it in like really simple terms, the idea for us was translate what was a sustainability agenda into an investment strategy for commercial industrial real estate ownership. And sometimes that's owner operators, right? Business and the building. And sometimes it's just developers that are developing commercial portfolios. And sometimes it's just passive owners of some real estate. But nonetheless, it's an investment strategy with really strong returns the way we do it. And that's kind of the distinction that I want to make right out of the gate.
Yeah, no, thanks, Derek. Yeah, that's, and some of the ways that, Mynt goes about that are unique in the industry. I know, I'm sure most, if not all of you, have gotten a call or some mailer or some email about, putting solar on your roof or doing some type of energy efficiency. You've seen all the programs, seen it, Solar City, Tesla commercial, or SunPower. I'm sure you've all seen that. What makes Mynt unique is a few things. One, we take a more holistic approach to these projects, meaning we're looking not only at one specific technology, solar on your roof or energy storage or one particular efficiency. We are really taking a more holistic, integrated approach, looking at one, how we can come in and reduce your consumption on site, and then look at how we can put on-site generation in the form of solar, other technologies to offset the rest of your load, because we know that efficiencies are a better bang for your buck. You get more savings from less dollars in, more dollars out, less dollars in from efficiencies than you do with solar. And so we want to create the best economics and optimize around that. So that's one way that we're unique. The other way is that we've approached real estate, commercial industrial real estate, which is for the majority leased, operated by, there's usually an owner and a landlord. Not every situation is necessarily owner operator. And in those situations, we've come up with some unique strategies around how we can basically play that split incentive game. And so that both the tenant and the owner, even landlords, property managers, all get to participate in the kind of three-win, like a win-win-win situation where everyone's benefiting from our projects in a way that makes sense for everyone. So those two things really have put us in a unique position in the marketplace to approach things and approach some projects that otherwise would not have really been viable or feasible to those other pure solar developers or other types of project developers that you may have seen or been in contact with in the past. So yeah, that speaks to our approach. There you go. So getting ahead of myself, but that's our approach there. And so our capabilities, how we actually execute on this mission and this approach, the strategy. We're turnkey, end-to-end, soup to nuts, design engineering, all the way through permitting, actual implementation. We have a self-performed division that does a number of our projects. They complete a bunch of the scopes. Not necessarily every project is entirely self-performed, but a number of them are. So we will, at the very least, manage the project and provide oversight, construction management, project management support for the implementation. And then the next phase of the project, post-operation, once you flip the switch and you're operational, Mynt will also stay on as your asset management partner, performance services provider, where we're going to stay on board, stay partnered with you for the life of these projects in order to make sure and maintain the expected performance that we're proposing. And that's the third really way that we are unique in this industry, is that we are embedding ourselves in these projects from the get-go. And so we're getting in early, helping with the design and iterating with you on how this product gets developed to optimize for the best economics, the best benefit, whether that be through some type of financing structure or some different lease structure. We help with that, all those strategies, and then we help execute the project, and then we stay on to actually manage and maintain and operate those systems, which are becoming more and more sophisticated. And so we are fully turnkey, like I said, soup to nuts, and we get involved in all kinds of projects, from pure solar and battery projects all the way through these fully integrated holistic projects that include efficiencies, microgrids, off-grid construction. And then actually, in some cases, we do deal with physical construction itself. We have a background, we have a general contractor's license in California, a B license. And so for some of our clients, we've actually done some renovation work as well that just ties into the greater work on the greater projects. Sometimes it just ends up making sense that we're already on site, we're built into the facility, and we know it very intimately, and just kind of sometimes makes sense for us to also take on some of these other scopes that may or may not be directly tied to our sustainability work.
And Rob, I'd love to kind of just add to that too on that note. you may be wondering, like, okay, great, that sounds like a lot, right? That you guys offer and do. Well, the truth is ultimately our goal is to not only design, engineer, and deliver sustainability in the commercial industrial real estate space, um, but also for those users of those spaces. And so what often happens is we're being pulled in by a landlord, say, a developer who has a tenant that's going to be, maybe a build to suit type of situation, where as we're designing and engineering to be zero net energy for that, the last big one we did was for an industrial bakery, as an example. That we're so embedded in the economics and the pro forma and the tax advantages and all the benefits that come along with the sustainability work, that they're often like, well, hey, you guys are already so deep in this thing. Will you just run our renovation project as well? And so that's what Rob's talking about. The reality is we're not really selling a product as much as we're partnering with owners to transform their real estate for net benefit to everyone. And that's really where our kind of breadth and depth comes from, is that once you're in that space, and guys, we should also tell you too, we also own commercial real estate. So we're also, very familiar with what it's like and what comes along with that. And so our goal is always to partner with our clients in delivering the best possible results for what they're after.
Yeah, I think that's a key point, is that we really are kind of sitting on a similar side of the table. I don't want to say that we're fully on your side of the table, but we're familiar with your side of the table, as an owner, as a landlord, as a property manager, and we've, in almost all of our projects, are in the that negotiating environment where we're working with the tenants, working with the property managers, and you yourselves as owners, owner operators, and really, yeah, kind of coming to that optimal point of mutual benefit across all parties. And so that's a key thing also, that like I mentioned before, it's just one of those things that differentiates us, where a lot of other developers really aren't coming from that angle, that approach. And so it's an important thing that distinguishes us and creates that unique approach. This slide here really just talks to the breadth of our technology suite. Like I said, we're doing straight pure solar battery energy storage plays. We're also getting involved with sensors and automation, building management services, all types of measurement and verification services, and performance service, monitoring and operations management. And we have recently done a bunch of work with microgrids. And for those of you that don't know what the microgrid is, in a simple sense, a microgrid is basically a facility that can generate its own power and operate in an island where it's not connected to the grid. Doesn't mean it's always not connected to the grid, but it has the capacity basically to create enough power on site, self-generated power, to power the facility in the event that you cannot be connected to the grid, like in an emergency situation or shutdown. We recently completed a project for a health clinic in Hollister, where they now have the capacity to completely go offline for a number of days, if not potentially indefinitely, in the right conditions. And so if disaster strikes and you need to keep the clinic open, it'll serve as a community hub and center and resource. Meanwhile, throughout the year when they are open and operating, they're operating a zero carbon facility. They're producing all their power on site with solar, and they're saving 100% of their electricity bill, basically is offset by the solar produced on site and all the efficiencies that we installed.
And so why is that important, guys? It's interesting here. We had wrapped up that portion of our work with that facility pre-COVID. The microgrid was built pre-COVID, and it's interesting because at the time there was a specific need around having the refrigeration capabilities for vaccines. There are a number of vaccines that they keep on hand all times. None of us knew what the vaccine scenario would look like a year later. And here we are, where we've built a healthcare facility where no matter what happens to the grid, they're able to keep their sub-zero temperatures required for the COVID vaccines, which means more people can get inoculated, regardless of weather conditions or fires or things like that. So it's just it is the future. It's the future of healthcare facilities. It's something we care a lot about, and it's incredibly difficult on the design and engineering side to do. But that is one of the things we deliver. Now, more and more, your industrial facilities that maybe aren't quite as critical as vaccines in a pandemic, but still certainly important in that they're maybe producing food, for instance, have that same ability to maintain the ability to wind down operations in the event of a power failure, and avoid losing a lot of goods that could be used for future baking, for instance. So the idea is that critical infrastructure is always critical for the person that's doing it and using it. So that's what's important about battery storage and microgrids, and that's where a lot of our focus is going. So I know that that's probably a big question on a lot of your minds is, hey, we keep hearing a lot about batteries. Yeah, we were delivering batteries, years ago in a way that now is becoming a little bit more of the expected norm.
Yeah, and that's another good point. The idea of resiliency, I think it's come up a lot recently in everyone's mind, and I think the traditional thoughts around resiliency are usually, hey, well, we've got a big diesel generator. If things go down, we've got this big diesel generator. And I think the new normal is really looking at how do we attain that resiliency without the carbon footprint of a giant diesel generator. And is a diesel generator even going to be going forward? How reliable is that going to be? What are the costs of maintaining that generator? What are the costs of getting diesel fuel in an emergency? What if we can't get diesel fuel in an emergency? And so this idea of on-site zero carbon resilience is becoming more and more important and even more critical, especially to critical facilities. But what your critical loads may be are going to differ, right? Like Derek said, I mean, if you're a manufacturer, it's critical that you keep your manufacturing lines going. If you're a clinic, it's obviously important that you keep your vaccines cold. If you're a cold storage facility, you want to keep your freezers and your refrigeration operation continue to operate. So all kinds of reasons why resiliency is as critical as it is and why it's become such an important issue. This slide right here really speaks to our process and our system, and really just shows the without really showing durations, but just kind of a step-by-step process of how we move through our project development. And it starts with that feasibility study, and that's really the key. And this is something we do for all of our clients as just an initial step, just to look at what are the opportunities here? What are we looking at? What do you want to accomplish? What are your goals and objectives? Do you have a specific decarbonization mandate? Are you just looking for savings? Are we looking to just upgrade the facility for future tenancy? What are the objectives and goals that are going to be leveraging these sustainability projects? And so how feasible are they? Are they from a technical perspective, from an economic perspective, from just a structural physical build perspective, permitting? We look at all those things at a high level based on our experience and all the metadata that we've collected over the course of all of our projects. And so we build this feasibility study, and that's kind of the first step. And we have this conversation around what's possible and what is feasible. If everyone likes what they're seeing and wants to take the next step, then we move into design engineering, and then some more granular energy economic modeling, where we look at your specific utility data and the rates you're on or going to be on, and how that plays into the new operation, the newer facility, the new operating systems that we're going to be installing, whether that's generation or efficiencies or whole building management. And then all the way through to construction documents, which are your permitted set of plans that we would bring to the county or the city to get approved. Then project implementation, execution, and then that energy asset management piece that I talked about, where we stay on board and embedded in that system to make sure that it's performing as expected.
And guys, too, it's something just to mention there around the feasibility study. I can't tell you how many times we have a potential client ask us like, "Hey, what are we talking about here? Is this, am I looking at 500,000 or 5 million? Like, what are we doing?" And so the feasibility study is designed for a couple things, right? It allows us to to flesh out all the low hanging fruit and all the potential for your property as far as what can be done for people, planet, and profit. And what would that profit look like? What's that yield look like? And how is your organization structured? And it allows us, like Rob said, a conversation where at no cost, we're able to deliver a report to you in a fairly quick turnaround that's going to outline all of those questions or answer all those questions and outline a plan that's just kind of a general term saying this is roughly what the project would look like from our point of view. And it gives us a starting place to start to iterate, as well as have a conversation around different funding sources, financing, what are the tax advantages, that we can look into with your accountant that we're on the Zoom here with. And so, it's a fun starting point, and that's why we have really done a lot of work to create what is typically a long, sophisticated process to deliver a quite accurate report on what's possible for your building in essentially a deep dive assessment, but do it in a very quick and concise way, because it just really gets the conversation going. And so I think that that's a big part of this is like, hey, I don't know what we're actually talking about. How do I get a view of that? Let's look at a building and turn around a feasibility study. It's really the starting point.
Yeah, and just to dovetail into that, this slide here that you're seeing is basically a slide out of one of our feasibility reports. It's essentially what it is a snapshot, just cut out of one of our reports. Just shows you how we've really taken a lot of time in crafting something that was simple and easy to follow, that highlighted the core benefits from an economic perspective. And like Derek was saying, gives you like a ballpark rough order of magnitude idea of what the opportunity is, what are my capital requirements, what are the cash flows look like, what are my paybacks, just some of those general metrics that give you an idea of what we're basically proposing. And so here, without diving into the details of it, you can see that we're highlighting gross costs, net costs after incentives, which we highlight what those incentives are. These projects, as you have probably know and understand at this point, have tremendous tax benefits, not just solar and energy storage, but efficiencies also have there's tax advantages to doing efficiency work. And then there's other compounding benefits, economic benefits from the cost savings and depreciation. And so there's all kinds of ways that these projects really create advantageous economics. And as you'll see here on the right, this is a situation where we're talking about 100% fully financed project where there are no capital requirements, and it's literally $0 out of pocket. And we're talking about creating enormous amounts of cash flow in the first year with all the tax benefits, and then ongoing annual savings, which translate into net operating income. And we'll talk about that in a second. But with really strong performing net present values and high. I mean, when you're talking about a fully financed project, it's hard to put like an IRR or an ROI on it, because it's basically an immediate return. And so these are really what we'd call cash flow out of the gate projects. We love these. We love structuring these. We have a number of different ways that we can structure these kind of deals. Depending on whether or not you have the tax appetite to take on some of these tax benefits, we bring in a third party to do that. Do we use more of an off-balance sheet type of operating lease? Do we use on-balance sheet financing? There's this other form of financing called property assessed clean energy, which some of you may be familiar with, which we can incorporate a number of different measures, solar, battery, basically anything that saves energy or water can be included in these PACE financing structures. And so sometimes those are really advantageous structures that you get to amortize the cost of these projects over long term at a pretty decent rate. And so which case the natural ROI is basically extended over this course of 25, 30 years, and that just creates immediate cash flow. And so this is just one snapshot. This second slide is another snapshot of the same thing, but here we're looking at an owner capitalized scenario. So basically a fully capitalized by the owner system. And here you're looking at, just again, fantastic returns, 17% IRR, huge cash flow in the first year, and then ongoing massive net present value. And then if you are translating that savings and those annual cash flows into net operating income on the building, then you're talking about a massive uplift to the actual intrinsic value of the property itself. And so this just gives you a little snapshot into some of the metrics that we're looking at, and you can all agree. I think you'd all agree that these economics are compelling and pretty fantastic. And in the given marketplace that we're in right now, with low interest rates and the volatility in the stock market, and other than reinvesting money in your own business operation, these investments are just are phenomenal, and really outperforming basically most anything else you're going to put your money into invest in.
Well, the other great point here, it's obvious, guys, but it's funny how it's easy to kind of glaze over this point, which is, most real estate investment firms or developers are very familiar with deploying capital into real estate for returns. Those returns typically come from some kind of a value add and to the property, and tenancy, right? And getting the right and best tenants, and then good leasing. This is a way to actually squeeze more value out of that same property in a different way. So oftentimes we're seeing kind of a light bulb moment with our clients in somewhere in the process of, explaining how we do things or talking to them about their property, where they realize that this is a way to actually get more yield out of their property without having to buy more property. And sometimes we're in a buy mode, sometimes the market's favorable to buy and sometimes it's not. And if it's not currently, it's very, very, kind of one of those times, might not be the time to be buying yet. It's a great way to reinvest in your existing real estate in a very, very safe way to get great returns out of it. And so we kind of feel like it's a turbocharger to any existing real estate investment model, whether you're, that's all you do, or if it's just a part of what you're doing with some of your capital. This is just a very safe way because it's investing in an already existing secure asset. And sometimes it'll be seen or could be seen as a hedge against a poor tenant environment, right? COVID is an example where you've got some, the tenant market softening up a little bit. This is a way to kind of have a little bit more of a hedge. We can get into more of that as well. That gets a little nuanced, but certainly it's part of the plan too.
Yeah, and maybe that's a decent point to say.
Right, I probably just jumped like 5 slides and just went way off. I do that, guys. I'm sorry.
That's all right. No, I think it's a good point to bring up that, so while the core, competencies and the projects are really these sustainability measures, solar, battery efficiencies, there is this other, element to our services, and that is, understanding the marketplace for carbon credits and carbon taxation. And more recently, there's a new program that incentivizes people to electrify their vehicles, forklifts, fleets. And we are, Mynt, we're a service provider in that space. We have, we're certified with the state and the CPUC and the California Air Resources Board. And so we can actually help you basically broker those credits that you'd be creating through electrified vehicle assets and trade them on the open market that is now, it's been growing really rapidly. And so we can actually help monetize those assets without really doing anything. It's just one of those things that, because we're in the industry and we're following and tracking all of these programs and initiatives and state subsidies and incentive programs, it enables us to look at those other ways to just create other revenue generating opportunities that in some cases don't even require any more investment. And so those are the things that I think Derek's mentioning. There are other things we could talk about where if you've got an asset on your building, let's say we build a bunch of solar and we put a bunch of batteries, and then all of a sudden you're without a tenant, there are ways to continue to monetize those assets. And those are, like Derek said, they're a little bit nuanced and they're in a nascent form right now. They're just kind of developing with the local utilities and the advent of these community choice aggregation utilities. And so, but there are ways that we can continue to derive revenue to basically monetize those assets, even in the case of a loss of tenancy or a vacancy. So I think that's another reason why Mynt is unique in this space, is that we're really looking out as from that owner's perspective, and real estate ownership and building property asset management perspective. And that it's important because these assets are 20 plus year assets. And so it's important to understand how they're going to operate over time. It's not just to build it and walk away and hope that it performs like it does. There's a lot more to it, just on the system level itself, as they become more and more sophisticated. And there's just all these other opportunities that we just don't want to miss. We want to be able to take advantage of, and that requires having someone like Mynt that knows what they're
it's a little bit like when you go to your stockbroker, for instance, right? Your investment broker. You hope that you're not going to kind of pick your portfolio and that your broker is going to sign you up and get you engaged, and then just kind of forget about it and like put it on a shelf and hope that it does well, right? What we're talking about is always looking for opportunities to continue to improve yield on your investment. And that's really that kind of long-term partnership that we're talking about. So it's, one of those things where most people aren't looking for more partners. We get that. But what we're saying is you are looking for somebody that has skin in the game, that's willing to look at your asset and your returns and your investment the same way you do. And that's where we're coming from.
Truly. Yeah. And as far as validating the economics that we're talking about here, sometimes people will say it's just too good to be true. And what's the reality of tax credits and all this stuff? It just seems like you guys are throwing out all these big numbers. And that's why we're here today with Jennifer and her team. We've had conversations with them about this very thing. And they've got clients that want to understand these things better. They brought us in to help you as their client understand how to get there, but they will validate and confirm that all these economics, these tax benefits, they're really there. It does seem too good to be true, but the fact is the federal government, the state, they're now all these mandates, there's renewable portfolio standards. There's all these reasons why the federal government and the state and the utilities are all incentivizing people to do these things, to the point where it's almost, it seems intuitively like they're almost creating a situation where they're losing business. But the fact is the grid is becoming less and less reliable. There's too much stress on it. And the utilities themselves need us to, as their customers, to really deal with that peak demand, that just kind of, it's become
the grid instability. And there's a lot we can go deep in the weeds, Rob. I just in the essence of time, let's kind of keep going through things. I think that we're probably, I don't know, Jennifer, if this was going to be the forum where we would have some questions at the end that we could answer. Maybe you'll have some to pose for us, just based on what we've covered here. But let's just kind of keep moving, Rob, because I think at the end of the day, we're really hoping to convey to you guys is there is a one-stop shop, vertically integrated solution for you to turn your real estate into a better investment, because you're investing in sustainability, which is investing in the future, for our kids, a better building for your tenants or you to be in. All those things are happening all at once. And that's really what we're kind of trying to put a bow on here, is that was what we set out to build. And that's what we've been very successful doing over almost the last decade. So let's keep rocking. What's next?
That's really,
was that
most of what we have. We can look at some of the projects that we've done, just to give you guys an idea of the types of projects and the breadth of, the types of projects that we've gone and done.
Let's talk about each one real quick, Rob. So these guys were a high-tech manufacturing facility up in Fremont, and really unique in that they run 3 shifts. They almost 24/7. There's almost no downtime. So super high energy use out of this 83,000 square foot facility. And we at the time, that owner, it's an owner operator. They own the building and the business in the building. And one of the things they wanted to see was some proof first. Like they wanted to see some results. And they're like, hey, I love the idea of solar and battery storage, but we've got some stuff that we really want to work on. We have, I think it's 900 and something, high bay HID lights throughout that facility. And, we've got old HVAC equipment. We've got a lot of work to do. Let's focus on the energy efficiency piece first, and let's get that done and see what happens, right? And so we built an economic model around the cost, and we built a construction schedule, and we found ways to go in and renovate on these energy efficiency measures, which were windows, insulation, lighting controls, HVAC, and HVAC controls. And that was kind of the general look for us at energy efficiency. So we built an economic model. We got everybody on board. They signed off on it, and then we had the fun task of delivering this project while they were running, basically 24/7. So we did it very well. They immediately saw significant savings. Of course, they saw savings on their bill that were greater than even what we had modeled. We tend to be conservative. We would much rather outperform our own metrics than the opposite. And so they got so excited by that they said, well, let's use that as kind of now we can map out that savings over the next 2 or 3 years. And let's use that as kind of a funding device to go after the solar project. So almost a megawatt of solar on this facility between the rooftop and the carport that you don't see in this photo, but it's off the back of the building, the far end of the building. It may not have actually been built when this photo was taken, if I'm looking closely at it. Nonetheless, almost a megawatt, which essentially got them to zero. So wouldn't call it true zero net energy because they still have a tiny bit of natural gas that they use for, I think it's their hot water heaters, that just didn't pencil out from our perspective. Oftentimes trying to get off of natural gas when you've just got a couple water heaters doesn't make a lot of sense from an investment to return strategy. However, now some new equipment that's come online recently has made that a little bit more possible. But at the end of the day, this project was what we would call, a zero net electric project where they essentially have zero bill, and we track and monitor that on a daily basis as one of the many projects that we have that we're actually getting. We're contracted to continue managing, and so we make sure that they get the returns that they expected.
So I had a good question that came in.
Sure.
It says,
Yeah.
is there more of an advantage for medium to large companies versus small companies? This person said they looked into solar before, but were told their power consumption versus roof space wouldn't be adequate and the ROI would take forever. What do you say to that for the smaller companies, maybe that don't have the square footage that this particular example had?
That's a just good question. And my initial response would be that it may be the case where a lot of the times you don't need to necessarily offset your entire bill to make economic sense. A lot of the times, actually, we are recommending that you don't do that. While we, just from a mission perspective, would love to create a zero carbon facility and offset all of your utility consumption. A lot of times it doesn't necessarily make full economic sense to do that.
And Rob,
there are certain, yeah,
that was, the thought that pops in my head as well is, you're also looking at, what we would call a sized constrained facility, right? Where you can only put so much solar on and you're not offsetting all of your bill. Well, the kind of, and I'm sorry if this wasn't true, but the kind of lazy approach of the solar industry, when you're just a solar company, whoever it was that they spoke to, they're really out there just trying to sell as much solar as they can. That's their goal, right? And so they don't really want to drive down your energy usage first through energy efficiencies, because that's cutting into what it is that they do, what they want to sell more of, solar. So we actually, through that holistic process in a facility like that, knowing nothing about it, I can tell you that no matter what, our offering would be much more advantageous and probably pencil a lot better than whatever they showed you, because we would look at some of that low-hanging fruit energy efficiency measures where it's a kind of a turbocharger to the deal, in that we're first reducing energy consumption before we try to produce enough on your roof to offset the rest. there is a little bit of a threshold where if you're not quite dipping into the, the meat of your energy bill with the amount of solar you've got versus consumption, it sometimes doesn't pencil. But all it takes sometimes is just to add some, bolt-on HVAC technology that economizes and optimizes your HVAC, or things like low-cost window films that are reducing solar load, which then reduces the HVAC consumption. Or sometimes you haven't done your LED lighting project yet, and it's a simple LED lighting project that's going to shave 15 or more % of your energy bill off right there, giving the solar a better opportunity to perform for you. So I think it's more of that, like, that holistic approach that makes it possible. It is a very good point and a great question. Yes, sometimes when a facility gets too small, it just doesn't make a whole lot of sense. However, the way we do things is giving you a much better shot at having it make sense.
Yeah. Yeah, absolutely. And I mean, there's also, energy storage now for those situations too. A lot of times in a commercial facility, a lot of your bill will be based in demand charges, which, typically with just a normal, just pure solar installation, you can't necessarily offset, but maybe solar plus a little bit of battery, and you can make a huge impact with not a lot of footprint of solar. You can still have a huge impact on your bill. And so maybe that's another solution to getting there, to making it pencil, giving you that ROI. But yeah, in general, looking outside of the box and not just trying to make a rooftop solar array work. That's kind of the key to our approach is let's look at other ways to make it pencil. Maybe it doesn't involve solar at all.
Rob, before you scroll away out of these economics, I do want to make a point here. Of course, this is an owner operator, but every time that you own real estate, you've got a separate LLC there with maybe other partners in that LLC that aren't necessarily partners in the business. And in this case, one partner had a majority share of this building and looked at our economic pro forma and kind of, the metrics for this project and said, wait a second, I'll fund that, right? And so that owner partnered with the business and essentially funded the project and created a scenario where he was able to deliver power to a very, being one of the highest costs for these guys manufacturing, at a much lower rate, but he was able to create new NOI on the property, increasing property value that was beneficial for both, because the business itself did own part of the LLC that owned the building. So the point is, when you look at, a $5.25 a square foot annual savings, and you look at, real estate rates and values and understand cap rates as a building owner, property owner, you see how meaningful that can be, right, on your property value. And then you look at an ROI of 4 years, it's kind of becomes almost a no-brainer. Yes, this was a unique facility. Not everybody owns an insanely high energy use manufacturing facility or runs a very high energy use manufacturing company. This is a pretty extreme example. However, there's a lot of these. There's a lot of examples that we have, and maybe there's more on the slide deck. I don't remember, Rob, of other examples that maybe aren't so kind of intense like that. We mentioned the bakery project that we just did. Maybe we'll just talk about this real quick. It was a local Santa Cruz kind of legend, Beckman's Bakery, or Beckman's Old World Bakery as they're known. I grew up with their bread, I can tell you that. And so we had the opportunity to help them move into what was an old cold storage facility that we gutted and did a build to suit for their specs. But at the same time, we wanted to make it a low energy use or zero electric. Pretty hard to get a bakery off of natural gas and have it make sense. Just doesn't happen. They use a lot of gas heating. But we wanted to have it as low energy uses on the electric side as possible. And we got it right to close to zero. I forget what percentage, but basically they're 97%, something like that, which really did a lot for them because they were moving into a much bigger facility than they had ever kind of imagined that they would. And one of their kind of concerns was the ever increasing utility cost on the electric side, right? They were really, really worried about being in a bigger facility that they were going to use to kind of scale their operations and really, sign some bigger contracts with Whole Foods and groups like that. And they go, what's going to happen to our electric bill? And so building in a energy efficiency infrastructure, as well as large scale, I forget the size of this, but I think it was a 400 kW rooftop system. They now have that true hedge where they can scale their operations and their revenue without having that kind of law of diminishing returns working against them, where utility costs are going up faster than they can keep up with, and where they're losing profitability with their scale. So being able to look at this and kind of have a fixed utility cost, that we worked a deal between the owner of the building and Beckman's to get them in a position where it was built into their lease, and they could kind of forget about it. It's really a neat thing to see, because a local company is able to truly grow. One of the reasons is that they've got this flatline utility cost. It's just amazing. So that was a really fun project. We went through a number of phases. New roof. We put on a new roof. A lot of course, new HVAC equipment. All the solar, and then the whole build to suit renovation. And we don't have pictures of that in this deck, but it's pretty neat. If you go to our website, I think there are some.
Yeah.
So that was a fun one, and a kind of heartwarming for me.
Yeah, and we just generally, I mean, we love working with California producers, manufacturers, makers. We think we have an important role to play in just allowing those clients, those makers, to be competitive. I mean, it's tight margins, we know, in all these businesses, across all these industries. And, with outsourcing and, globalization, there's so many forces compete, that create that super competitive environment. And if we can be helpful by reducing operational costs and utility costs and bringing, tax advantages to the table, we want to do that. And so help our local California, American, US based manufacturers, makers, producers. Anything we can do to support that is just great for us. It's definitely, I know it's close to Derek and I's heart, and just the company itself. We just feel like it's an important part of what we're doing and bringing to the table in general, just for, US industry, especially California makers and producers.
I'm sure everybody's seen and heard some of the episodes of Jennifer's fantastic podcast, Rebooting Capitalism. I love the title. And what we love about what we do is we're actually helping what we think is a very difficult endeavor, and to be in production of any kind in the United States, and specifically California. And we're losing a lot of that to overseas, and have been for decades. We're seeing a resurgence. We're seeing a big need, people wanting to bring manufacturing and clean production back to these stateside. We love that what we do actually creates that as a possibility, or helps, right? Certainly eliminating utility costs is a great step in the right direction in competing with overseas production costs, right? So for us, the idea that we can reinvigorate that I think one of the things that made America, so dynamic to begin with, in that we were always a country that built stuff and made things, and we've lost a little bit of that. And we're big fans of those of you who are, so enterprising to take that on as an endeavor. And what we do really, really benefits that sector, that manufacturing, that technology, manufacturing sector, that industrial sector. It's really important to us. So here's another cool project. Rob, thanks for pulling this up. This one was neat. I won't go too deep into the weeds on this. We did a project for Integra Technologies. It was a energy efficiency project. There was no solar on this one, but one of their biggest energy costs was, or utility costs, I should say, was water. And they used, I'm gonna try to remember, it's been some time now, but we ended up saving them about 1 million gallons of water a month through a, they were producing silicon wafers for chips, and they polished those wafers with water jets. And what happens is a lot of the silicate material ends up in the water that ultimately can't just go down the drain, but it is wasted. And so the cost was becoming very difficult for them to grow that business, because the cost went up. It's such a great ratio to revenue. And so we built an entire, essentially industrial water treatment plant on site that would capture all of that water, filter out this super fine silicate material and then put it back into their processed water system as clean as it was when they first got it from the city. And so the ROI here was just, it was incredible. It was a 3-year ROI on a roughly $1 million project, if I remember correctly. But it was just really cool to see, because not only was it like helping this business, who's got an important part, in the technology, chain, but also that, we're just not wasting water. I mean, good Lord, 12 million gallons a year saved. If we could do that more, it'd be a good thing. So this was great. I think this project, if I remember correctly, won Silicon Valley's award for the best water savings project of that year. If I remember correctly, it was maybe 2 or 3 years ago.
Yep.
Yeah. And so this was just a neat project. It was just one of those, like, kind of roll up your sleeves and figure out some really hard to figure out things. This design of this system, this photo doesn't do it justice. It's a pretty big kind of water treatment plant there. It takes up maybe, 40 by 80 kind of footprint. But it started as a sketch literally on a piece of scrap paper in a conference room, where we just started talking about their process and sketching it out, and then worked with them to continue to design something that ended up being really great. So combined with all the energy efficiency, the obvious, right? LED lighting, controls, HVAC stuff, and this water savings, it was just like it was bananas. Yeah.
Yeah, at the time, the city of Milpitas had just gotten back to them and told them, that this is months before we installed. They basically said, hey, we're raising rates by, it was, I think something like 35% year over year.
Yeah, they had entered like another tier of usage, right? So it was just about to blow them up. Essentially, they were looking at, do we have to move this facility some other place other than Milpitas? Do we need to cap our capacity, right? How much we produce? Or do we try to figure out our water consumption? And so we did that for them. So we're Rob, we're getting close to the time limit here. Let's kind of put a bow on this thing. I'll let you wrap it up, and then if there's, Jennifer, I don't know if there's any comments you want to make or questions to answer.
Yeah, I don't know if we want to take questions. We're open to it. The rest of this deck is really just showing our experience. We've been on the Inc. 5000 list 2 years running now. This was actually last year, so it hasn't been updated, but 2 years running now. We've won some awards. We've got, our CFO was awarded the 40 under 40. This San Benito Health Microgrid is really the first of its kind in PG&E territory in California, maybe even the US. We've got a number of projects operating all across the Bay Area and even other parts of California as well, but focused around here. And you can see here, we track, how much carbon we're saving. I mean, over 14 million kilowatt hours saved, which is equivalent to, the 13,000 acres of US forests planted. So that's the core of the mission.
I think the number is probably double since we made this slide.
Yeah, this is actually outdated. So, but yeah, our clients, a long list of all kinds of players across different industries and spaces. And this is us. We've got Derek, myself, and Karina, and that's really it.
By the way, guys, weird photos. Just got to give you a note there. That was from a company holiday party. So yeah, we look like we're partying. So we were having a good time with the team.
Yeah.
All right. Thank you, guys. If anyone would like to ask a question live, go ahead and use the little raise hand function, and I will unmute you to answer or to ask a question if you guys have anything. So I don't see anything in the Q&A box. If you're shy, you can always put it in the Q&A box. But I know you guys do, manufacturing plants. I know you guys do, the technology centers. You guys also do a lot of nonprofits and schools and museums, and it's not the big manufacturing plants that we all think of.
I'm glad you brought that up, Jennifer.
Yeah.
Yeah. No, we, obviously it's impactful to highlight the big stuff that, heavy duty stuff, but we're actually, a lot of the projects we're most proud of are the ones that had the most impact in our communities. Like this, there's a lot of, in our area, there's a lot of single school districts, kind of remote, a little bit more rural schools. And we did a lot of schools like that, where we basically made these schools zero net. And almost before education had gotten all the way to that point where now it's becoming a little bit more common. You know, a lot of we worked with a lot of the dioceses, different dioceses throughout the Bay Area, to deliver projects like this for the rural churches that really needed the savings. And so we worked with a great impact investor financing organization that was able to deliver power at a very, very low rate. So we were kind of all working at us and the finance organization at almost no profit, just to kind of do the right thing for these more rural churches. There were some bigger churches too, but a lot of rural churches. And then, yeah, Rob's got a lot of contacts that are in the nonprofit space that always, there's always a need to save, right? So they can do more good with the money that they do have. We love that kind of work. And it really is kind of the heart and soul of who we are.
Great.
Yeah.
I've got a live question here if you guys are
Cool.
game.
Sure.
We've got Wally. Wally, I've let you talk there. If you unmute yourself, we should be able to hear you.
Unmuted. I would be curious where we could get in contact with you if we have a specific need, a number,
You bet.
and address. Where are you located?
Corporate headquarters, Wally, is in Santa Cruz. So we're just downtown Santa Cruz. And we do work all over California, and actually moving into some of the Western states now too. And if you've got a pen, I'll give you my phone number right now. That's how you want
Great.
to. You just give me a personal call, and I'd love to chat with you. You can reach me directly at 831-818-5313. Give me a call, we'll talk, and then I'll put you in touch with the right guys on our team.
And
Okay, good.
our follow-up email will have all of their contact information
go.
as well as the recording. And possibly the deck. If Rob will send me a copy of that deck, I'll make sure to add that in the follow-up email.
Absolutely.
Thank you, Wally.
Thank you.
Jennifer,
Anybody else? Any last minute questions? I did have a nice response from Dan here saying, my compliments to the service of Robert and Derek's company is providing. We have all our family homes on solar and LED, new HVAC, so we're in line with their recommendations. And I feel anyone on this webinar should really consider their services and products. So nice shout out from Dan Orlando. Thank you.
Dan, thanks so much. That was really cool. Appreciate your support. Obviously, we're passionate about what we do. We really believe. We don't just believe. Honestly, the world is starting to kind of confirm. Almost all the largest investment firms out there are directing most of their funds into sustainability at this point. So there's a lot of confirmation. Certainly, the new administration is a lot of confirmation there that what we're doing is the right thing. And at the end of the day, if, like Rob said, if it doesn't make dollars, it doesn't make sense. It's for us, it's a twofold thing, right? It's do the right thing and make it a profitable endeavor.
Right.
Jennifer, I want to take a minute too, if we're still waiting for any other questions. I just wanted to say thank you specifically very, very much for helping us find the best accounting firm in the world.
Thank you.
And we're super grateful to be working with you. And also thank you so much for kind of pulling us into the fold. I know that you guys have a multifaceted mission as a company as well, and sustainability being a big part of that. Thank you so much for giving us the opportunity just to share a little bit about what we do and what's possible from our side of things.
Awesome. Well, thank you for taking the time to come on and talk with us more about what you guys do and the possibilities for our clients to upgrade their buildings to really take advantage of the new technology out there in, being better for our planet and our resources. I appreciate your time today. We are at time. So thank you for joining us. Like I said, you guys will all be receiving a recording, a copy of the slide deck, contact information, all the good stuff later today. Thank you all.